So, what is a tax free savings account, or TFSA for short? And why should every Canadian citizen want to have one? Well, by the end of this video, I'll give you all the necessary information that you'll need in order to make an informed decision on whether or not a TFSA is appropriate for you and the other adult members of your family. My name is John Moakler, and I'm the founder of Moakler Wealth Management. And for the best advice on how to protect you and your family, subscribe to my YouTube channel and hit the bell notification so you'll be notified when we launch a new video. Now, I'll start off by saying, in my opinion, I think the government named this incorrectly. They call it a tax-free savings account. I really think they should have called it a tax-free investment account, or TFIA, because most Canadians are under the misunderstanding, because it has the word savings in its name, that they can only open up a tax-free savings account at a regular bank, and that's totally incorrect. However, a TFSA is allowed to invest in almost anything. And I'll share with you later in the video what I'm doing with my own personal tax-free savings account to get a little bit more extra reward, but also taking on a little bit extra risk. So here's the history of the tax-free savings account. It came out in 2009. And if you were at least 18 years of age or older, you were allowed to contribute $5,000 of after-tax money. And that's key. So this is money that's already been taxed in your hands that you're putting into the tax-free savings account. And then gradually over time, it went from 5,000 up to 5,500. And then in 2015, as part of a federal election campaign, the politicians increased it to $10,000 that year. But like all good politicians, once they got elected, they reduced it back down to 5,500, and it sits at $6,000 today. Now, why is that important to you? Well, if you haven't started a tax-free savings account yet, and you were at least 18 years of age or older in 2009, then you have at least $75,500 worth of contribution room today that you could put into a tax-free savings account. So each year, the contribution room goes up. So if you forget or you don't have money to put into a tax-free savings account, that's okay. The contribution room will continue to roll over year. But you do have to be careful that you don't over contribute to your tax-free savings account, because Revenue Canada, or CRA for short, will charge you an interest penalty of 1% on the over contribution that you put into your tax-free savings account. So be careful when you're calculating your tax-free savings account contribution room. Now, if you do take money out of your TFSA, say you take it out in calendar year 2021, you're only allowed to put that money back in the following calendar year, or in my example, 2022. Now, the good news is when you do take money out of the tax-free savings account, it's 100% tax-free in your hands, because you used after-tax dollars in order to contribute to it. So why is that important to you? Well, think about this for a second. If you had an extra $6,000 to put into a TFSA over the next 25 years, because that's the contribution limit right now, and you got, say, a 5% rate of return, at the end of that 25 years, you would have at least $300,000 in a tax-free savings account. And if you got slightly higher rate of return, let's say 7%, you'd have a bucket of over $406,000 of tax-free money. Now, I did say earlier in the video that I would tell you a little bit about what I'm doing with my own tax-free savings account. I'll start off by saying I do have a higher risk tolerance than most Canadians. And so what does that mean? Well, when the markets are going down and the statements come in, I don't open them up. As well, when the markets are going up, again, I don't open up my statements when they come in the mail. Why is that? Well, because those aren't my numbers. It doesn't matter what those statements are showing, because I don't plan on touching my TFSA for the next 10 to 15 years. So that's when I'll start to open up the statements, because those numbers today, they're not my numbers. So my TFSA is fully funded in the shares of a private software company. And if you take a look at my background, I came from the information technology world, and I also did startup software companies. So I'm familiar with the risk associated with that. And 18 years ago, I left that world to become a financial planner. And so I'm okay, because only 1 in 8 software companies survive in the startup world. So I'm okay with those odds, given my risk profile. Now, it's been over 6 years since my initial contribution to this startup company. And I've participated in 3 additional rounds of financing. And the good news is the company is cash flow positive today. That's a good thing. And they also the management team plans to go public in the next 2 to 5 years. So it paid off for me, but I didn't tell any of my own clients what I was doing with my tax-free savings account because that has an extra level of risk than most Canadians are used to. If you'd like to learn more about how you can take advantage of the tax-free savings account or get started or strategies, click on one of the links below to apply to become my client. And if you like this video, give it a thumbs up, subscribe to my YouTube channel, and share it with a friend. Thanks for watching. And always remember, when we design financial plans for our clients, we always make sure their money outlives them in retirement.